weekend all. Ira Epstein of Linn and Associates with your weekend update. And remember, this is a little different because we only look at longer term charts, and today is Friday, the 2nd of August, 2019. Now I'm about 3:35 in the afternoon, but you're going to be close to the settlement prices. Actually, stocks were a little lower. They've popped up a little bit in the last few minutes, but they'll settle just a fraction lower than that. The play, obviously, is gold. Traders are in safe haven investments. Why gold? Well, safe haven, that's the tradition of it. Look at the bonds and notes, getting the buy. Look at the yen. This was the week that we know that the Fed did a quarter-point cut, stopped its runoff of the balance sheet. Then the president comes out and puts tariffs on China. That creates a big vacuum in stocks. They start heading down. The dollar soared at that point. Finally, it's getting a little correction. And most currencies are now people saying, enough, I'm taking money off the table. That's what I think is going on today. The monster break, and I use the word monster, happened at one time in crude. You haven't seen a break of that size in a very long period. The other break that's monstrous today is copper. We call it Dr. Copper for a reason. And copper is a representative metal of industrial production. And who's the largest consumer of it? China. What do the tariffs do? Well, they guarantee the truce is off between the United States and China. If you think that truce is still in place and this is just a little message, I wish you the best. I'm not of that school of thought, but I could be wrong. That also hurt the crude, because they're such a large consumer. So if everything's slowing down, stock market down, crude down, you're putting your money into areas you're looking for safety. So when we look at gold, the one thing that's evident, it's pushing out the top on a monthly chart of the upper Bollinger Band. A Bollinger Band, and it has two of them, upper and lower, is an algorithm designed to keep the market trading within it. Now, part of the theory is when a market starts hugging that band, a little bit over it, a little bit under it, back and forth, that is a bullish signal. In addition, you've got momentum continuing on the weekly chart, on the monthly chart here, to point up. And these are the highest levels that you've been, given this is a monthly chart, since 2016. This is not a little bitty move. This is an event that is unfolding in front of us. The length of it, well, the market will tell us that, but that's what's going on. When I go to a weekly area chart of closes, you based out in the neighborhood of the 1280 zone, and you have moved up from there $160. It's certainly got a shot in the arm this week, being up for the week about $21 as we're talking. Has it broken out of the current trade pattern? No. The last rally high we had was back on the week of the 19th of July, and we got as high as 1454.40. You would think with all that's going on, you'd have taken that out. You have not. This week's high was the 1448 level. That's not bearish or bullish. This is a consolidation zone now. That's the way to look at it. Bad would be taking out this right here. Good would be taking out that 1454 level. What about what the market did this week? We have an outside week up. To me, and I'm the technician here talking, the importance of that is when you get an outside week, it gives me a number that should not be violated if the trend's going to continue in that direction. And that number is this week's low of 1400.90. Why? Because now I have a pattern of higher lows, higher highs. The market's back in sync. It hadn't been if I take this off. You had the market trying to figure out what to do. On the weekly, it was up in sync, but now it's given you, it's moved this high all the way up again. That's the importance to me. Where's the 18-week average? Far away. So if you're looking to get back to that number, if you do get back to it, people will say this gold play is over at this point. So that I don't think is in play is the right word to say now. What is in play are the Bollinger Bands. Now, you had quite a bit of period here. If I come back to this, you typically do not close or settle, is the right word, over a Bollinger Band more than 5 times in a row. So you had it here. This week, you finished at 1410 under that. So that didn't happen there. 1, 2, 3, right? That's 1340.10, and the 18-week average, 1346, the upper Bollinger Band, 1340.60. So you really had just 2 weeks in a row. You pulled back under it, you consolidated a bit, and you're trying to move out again. This is not an extreme taking place by any stretch of the imagination. Market still looks good. Next resistance of a Bollinger Band, at least, is 1465. When we look at momentum, it's up. It's just staying where it's at. I don't look at slow stochastics on weekly charts getting overbought or oversold. They're pointing down, or they're going sideways. This is still pointing to the upside. When we take a look at the ETF GLD, it's the same pattern. Higher lows, higher highs. You pulled back from when you had gotten over that Bollinger Band, consolidated here, and now you're trying to thrust up again. And again, you have an outside week up that I don't think should be taken out if this bull leg is going to continue. When we come to GDX, while the daily charts don't look as pretty as this, the weekly still looks great. You got the higher low, the higher high. You did not have an outside week up here. This market is stalled a bit more than the other two, and the resistance is going to be 28.71. I get that to a degree too, because miners are a little different play than they are in the raw material. The gold-silver ratio had been under a big correction from 93.85 to 86.94. I keep this 18-week moving average because when the market's over it, I say the thrust is up. When it's under it, the thrust is down. And the first correction often plays around, it doesn't have to, that 18-week average. You went right to it, so I consider that valid. It's trying to figure out what to do from there. When we go to silver, it had, prior to this, 1 week over the Bollinger Band, 2 weeks over the Bollinger Band, just like the others. So it got a bit excessive. If it pulls back from here, you look for it to pull into the Bollinger Band, possibly even challenge the 100-week average. That seems to be what it's doing. In terms of thrust, in momentum, it's still pointing up. The bias is up. It's just a corrective mood. Take out this high of this week, and you know what I'm going to say. You caught another bear group. I don't know how high it would go, though, because you don't have any moving averages I can use or the Bollinger Band. In the copper market, all you did is have a short covering rally into that, what I call that line in the sand, that 18-week average of closes, and from there, you've made a new low for this whole move. Now, if we come back to this low, I'm just curious to see what these were. Gives us an idea as to where the market was, and I didn't look at this myself. This market's low here was 254.30. So as we move forward here, this break that we've got, as big as it is, understand the importance here. We're back down into a neighborhood that got to 256. So that zone, because it's been there, it's probably a downside target. And it ties together a bit with the lower Bollinger Band. Momentum down, bias down, but one of these positions where you had short covering into that and you're not trending again. You're just in a state of collapse. Platinum, pretty clear what the market did. It was in an uptrend in the swing line, rallies to the 100-week average of closes, stalls itself out, and it's pulling back to the 18-week. It's still not saying that it has turned itself down. This is the line in the sand. If the market rallies, maybe that 874 turns out to be resistance again. Take out 809.10, you got a whole different look on the chart. So right now, I contend the bulls are still in control of this market. Palladium's different. You've had a wipeout in the palladium market. You broke through everything when you took out this 1504, and then the close under the 18-week average, you just killed this rally. And notice how this market came into a double top area, and momentum, well, it turned down. And it, as you can see here, it was stalling. That was last week. Then you made the higher high, and once you took out the 1504, you put into play the 18-week average as a potential. Doesn't mean it has to go there. As it turns out, you finished at 1402.80 or close to it, about $20 under that number. I would not be surprised to see the market fight a bit at that. Last, the dollar index. If we take a look, what's the objective if you continue up? Coming into the week, you had higher lows, higher highs. a potential, I'm not saying it has to go there, could be just like it was before, the upper Bollinger Band. It got to it, cleared it, and by the end of the day, it looks like it's settling about 50 points under it. So I think the pros took some money off the table. You know, I talk this way, and I do a lot of this, but on daily charts first thing in the morning. And the idea in my morning subscriber video is to go through the stock indices, to go through the currency plays, to go through interest rate plays with you, all the different sectors, right through the energies. I do approximately 40 futures charts, 5 ETFs. I'm able to say in the morning subscriber video, buy here, sell there, put a stop here, do this. I am not going to be right all the time, but I'm not going to be wrong all the time either. It's really balanced itself out. The one thing I like to use is money management. You'll hear me talking about that over and over. I cannot do these in the public videos. First of all, there's government rules. Second of all, I want to be paid for my knowledge. 26.5 cents a day. I think I'm worth it for your first 30 days. You see if you like it. And the price doesn't go crazy. You can then go $15 every 30 days, or you can even buy a 1-year subscription for $13 for each 30 days for $360 up front. That's the discount. You spend more than that probably on your Starbucks each day. In any case, to find out more, go to our website. Under the word education and research, it'll tell you everything about it right there, and that's where you can sign up if you decide to do so, and I certainly hope you do. That's what keeps these videos going. And just click right up here if you'd want, and that'll take you to that page as well if you're watching me on YouTube. Have a great weekend. I'll see you all Monday.